So, yeah, it'll be coming up to 3. Oh, I have.
Hello, sorry. I didn't have you then. Hello there.
Hi, Isabella. I'm sharing. Yes. Yeah. We will front load it to make sure that it's yeah, that's very good.
Yeah?
Okay, let's crack on then. Hello and welcome to today's discussion being hosted by Positive Money. We're going to be asking about the financial future of Britain and what is best for it, I guess. So what is the formal, have we got it up there? Yes, I did that fine. And we're very pleased to welcome a great panel today. We've got with us John Glenn, Conservative MP for Salisbury, also the Espionage Centre of the UK, I think, in terms of Russian spy.
We dealt with that now.
former City Minister, the UK's longest-serving Economic Secretary to the Treasury. John will have to leave at 3:30, so we will try and get questions into him early on. Also here is Martin Kersley, Director of Banking at the Post Office, and David Hale, Head of Public Affairs for the Federation of Small Businesses, right?
Yeah.
Okay. So thank you very much. And Fran, obviously, what is your this is the one I didn't actually learn. What is your official title? There you go. Fran can do her own introduction. Passing on to you then.
Great, so yeah, we are a non-profit working on money and banking that serves society, and our starting point is that no matter who you are, where you're from, what you do for a living, everyone needs access to money to buy food, make payments, pay rent, mortgages. So money is really a key tool for a modern functioning society, economy, democracy. And we need the banking and investment infrastructure to get money to where we need it. Small and medium-sized businesses, support for our high streets, face-to-face banking for those who require it, and critically to finance a green transition. But we're over a decade on from the crash, and we're not where we should be in terms of finance, money and banking. We've got less than 5% of new bank lending going to small and medium-sized businesses, which supports 60% of private sector employment. We have banks rapidly disappearing from high streets, taking with them crucial face-to-face services that millions rely on, including access to cash. And the UK's biggest banks, Barclays and HSBC, have poured $300 billion into fossil fuels between 2016 and 2021 in direct contradiction with the Paris Agreement. We have 11 million people falling behind on bills, credit card borrowing is rising at the fastest rate in 17 years, household debt is rising, putting financial stability at risk, and on top of that we're in a recession and the pound falling means the cost of imports has been going up. So on all these fronts we're seeing market failure, we're seeing a lack of provision of basic financial services required for our domestic economy. We're seeing financing of our over-dependence on fossil fuels leading to price stability and inflation, and with huge economic stability risks. But there has been some progress since 2010 under the Conservatives. There have been steps in the right direction. Post-crash regulation, giving the banking and financial stability mandate has been critical. Recently, the former Chancellor Rishi Sunak giving the Bank of England the climate change mandate, the green finance strategy, levelling up agenda. Whilst there hasn't always been the substance that we might hope for, starting these conversations has been a critical first step. But I think it's fair to say that progress is now at risk. We've heard things like the green finance strategy that was planned to be published this autumn could be delayed. There's concern it could be weaker. and concerned that Rishi Sunak's commitment to making London the first green financial centre won't be upheld. And earlier in the month, we heard the Chancellor Kwasi Kwarteng talking about the fact he wants a Big Bang 2.0. This threatens to wind the clock back on to pre-crash financial deregulation. So looking to add the international competitiveness objective, we've seen the City and the government looking to double down on an economy that serves global financial markets as a priority rather than supporting small businesses, communities and the green transition. And even the Competition and Markets Authority have raised the alarm on competition in banking. We have 5 big banks that account for 70% of total banking assets, and they are still obviously too big to fail. And a competitiveness objective won't address that. It will rewind the clock. And it's not just civil society who've been raising the alarm on this. They've been criticised by the Treasury Select Committee, regulators, and even industry heads such as the CEO of Lloyd's. But where are the opportunities, which we also want to talk about today? So one area is the Bank of England, as well as other central banks globally, are exploring how a digital version of cash could be introduced, and we see this as a real opportunity to bring about a safe, secure payment system with universal access, and a huge opportunity for increasing financial inclusion alongside protecting cash as well. Card fees operate like a regressive tax on smaller business and their customers, with the smallest businesses paying 4 times the biggest businesses per transaction. So a digital version of cash could help level the playing field on payments between the largest and smallest businesses. And we're interested in exploring a potential front end like the post office that could help to enable a digital version of cash to be accessible to small businesses and customers alike. Additionally, we do need to think about banks that want to get lending or want to get finance to those small and medium-sized businesses. Our biggest banks it's not in their business model. And so we do need to think about new banking infrastructure, mutual stakeholder banks with interest in communities and regions. And there is support for this from some corners of the Conservative Party and some Conservative MPs. But there is also a lot of political support for maintaining the status quo, and that's just the way it is. However, at the same time, Conservative MPs, do talk about wanting to get that finance into small and medium-sized businesses. But big finance is really the most powerful voice we have in Westminster. It's by far the biggest lobby group, most powerful, and it does drown out other interests. A report we released earlier in this year highlighted some aspects of this, looking at direct financial ties, the revolving door it maintains with the public sector and access to the Treasury. So we want to see Conservatives and this government address some of the issues I've spoken about today, and we'll be looking at the upcoming Financial Services and Markets Bill. And the key areas that we want to encourage conversation and hopefully change are abandoning the what we would say dangerous proposal of the international competitiveness objective. We think it's critical right now to give regulators a new statutory objective to align the financial system with 1.5 degree goals. We need to give regulators that responsibility on guaranteeing basic financial services to help the millions of people that are excluded. And we want to ensure that we clamp down on unparalleled influence of big banks and financial firms over politicians, government, political institutions. I won't go on, but as you can see, there's a lot to discuss, and I'm really looking forward to the conversation today.
Thanks, Fran. I just realised I failed to introduce myself. I'm Isabella Kaminska. I'm formerly of the FT and now heading my own enterprise, my own small business, so to speak. So I can suddenly empathise with small business owners. But let's crack on because we don't have much time. So John, 5 minutes to you.
Great. Well, thank you very much. It's great to be here, and I'm quite surprised by some of those remarks. I mean, having been intimately involved in financial services over the last 4.5 years as the government's minister, longest-serving city minister, I'm very happy to address some of the factual errors in what has just been said, I'm afraid. because we've done a massive amount on financial inclusion, and I shall go through all of that and what the legislation that is before Parliament now, that's about to go into committee stage, probably been delayed for a few weeks, will seek to do. Financial services is a massive part of our economy. We might not like that. We might want to say we wish we had more manufacturing, and we don't like the centrality of the city, but it is a core part of our economy, and it drives a massive amount of jobs, 1.1 million, two-thirds of which are outside of London. And what the Financial Services and Markets Bill does is deal with the reality that as we came out of the institutional framework of the EU, we need to find a way of regulating financial services responsibly, right-sizing them, using the freedom that we sort of have, whether we wanted it or not, as a country outside of the institutional framework of the EU, to do things responsibly. I have never and always said when I was a minister that we mustn't deregulate for competitive advantage. We must have sound, strong regulations, and that guided me in everything I did. I resisted a primary global growth and competitiveness objective because I thought that would be unsound for markets where the PRA and the FCA need to exhibit strong and high standards. So we have a secondary global growth and competitiveness objective behind the obligation to have sound markets governing our institutions. But I also recognise that banking has changed quite considerably because consumer behaviours have changed quite considerably. And Councillor Askell-Hock, who's my constituent, would know that when we've seen bank closures in Salisbury, the reason that's happened is because people aren't using the bank branches. They're using apps. They're using other ways of dealing with their finances, and they don't need to go into a physical branch. But I've always been acutely aware that we need to make provision for the most vulnerable in society, and that's why the legislation before Parliament, Financial Services and Markets Bill, includes an absolute guarantee of the maintenance of access to cash across the country. We have used and put in 380 million over the last 10 years to support the network of 11,500 post offices to take on core banking services. 99% of individuals' banking needs can be met through the post office network, and 95% of business banking needs can be met through that. But where I agree with the previous speaker is around the need to diversify provision. So I've invested a lot of time working with mutuals, working with APCL, the trade body for credit unions, and the bill also makes provision for extended services to be offered by what will probably be the largest credit unions. I also got Ron Khalifa to do a review of fintech, which we accepted all his recommendations last year to drive forward innovation, because it's absolutely right that fintechs will be able to gather better data to verify people's creditworthiness so they can access more affordable credit and not be subject to either illegal or very high cost credit or be excluded from mainstream finance. We have basic bank accounts, which are an obligation of the biggest banks, but there is still more to be done. And one of the other areas I worked on was financial inclusion, a financial inclusion strategy, working with the former pensions minister. And that's really, really important as well, because that means actually addressing the poverty premium that people feel and see in reality. Not being able to access insurance, getting housing associations to work better to get better premiums on house insurance across estates, and indeed enable them to offer more financial services because they often are a reliable relationship with tenants. But there is obviously always more to be done. No government minister, no matter how long they've served in office, would have answered everything. On the green finance, the UK is generally acknowledged to be the leaders in green finance, as was acknowledged. Rishi Sunak at COP last year made us the intention for us to become the first net zero aligned centre, and that will continue, I've no doubt, because what it means is that companies will have to verify how they're going to get to net zero by 2050, create real accountability at one of the world's, if not the world's largest financial centre for green finance in London. We did green bond issuance of 16 billion, and we also did premium bonds on green as well. So I'm always keen to explore how we can get banks to open up and provide more financing, the mainstream banks, to SMEs. But banks are not charities, they have to rely on business cases. We are seeing an opening up of alternative financial provision from different providers. I do want to see credit unions and fintechs taking a larger role, and I think mutuals also have a role to play. But banking does remain a very strong industry, I'm pleased to say, in this country. We need stable, strong regulation, underpinned by that secondary growth and competitiveness objective. And I think that will set us fair going into the future. Thank you.
Thank you very much. Martin, you have 5 minutes now.
Thank you very much.
The point of view of the post office.
Thank you, Bella. I suppose from one perspective, we are what you might call but a simple retailer. With our 11,500 branches that John referred to a moment ago, we are pretty much at the sharp end of what's happening in change, probably a once-in-a-generation change in the banking infrastructure. We all know that many bank branches are closed, many thousands since 2015, and as John mentioned, a lot of that's to do with how we all use banking services. We use apps, we use digital currency, we use digital forms of payment, more increasingly so over the past 3 or 4 years, as we've been physically separated through the pandemic. So the role that the Post Office is proud to have taken on is support for every community across the country. We arranged a banking framework some years ago, whereby pretty much every UK bank customer can now visit a bank, can now visit a post office, for any of their what you might call basic cash facilities. So we are an extremely strong supporter of the access to cash debate and the access to cash agenda. John's been very generous with his time. He's visited everywhere from the Highlands and Islands, landing a plane on a beach to go and visit one of our very remote post offices, right the way through to visiting our latest banking hubs, which are a new model whereby we can share access to cash through the post office counter facilities with a shared environment whereby different bank representatives can meet with their customers each week back on the high street. It's a hybrid way in which bank customers can once again have the kind of face-to-face support they need, especially when dealing with some of the real challenges that people are facing, cost of living crisis, with wanting to make a move from cash potentially into more digital ways, standing orders, direct debits, even sort of international money transfers. People don't feel enabled yet or empowered to be able to do that online, so therefore to come and talk to someone about it is a huge thing for them. We're delighted to be running those banking hubs. There are another 25 in the pipeline now, on the way to potentially some hundreds of over the next few years. So that shared utility model supports everything we've done through the banking framework. It supports access to cash for those who need it the most and those who want it. Let's face it, it's not just about a need. Many people just want to use cash. It's an essential part of their weekly budgeting. Anyone who's had to feed schools with dinner money, or charities with contributions and so forth, people use cash. And I think the FCA recently said that something like 60 to 70% of people use cash at some point through every single week. So even though we are talking about a move to a more modern facility, central bank digital currency being one, I think the requirement is on all of us. The onus is on all of us to make sure that the migration from physical to digital cash is done in a controlled way, leaves no one behind, fully utilises something like a state-owned facility like the post office to be the arbiter and front channel for every one of those services. So we're delighted that we can help make a move from physical to digital. We have a very strong role to play in every single community. And we know from our experience with banking hubs that when money stays in the community, when money is spent in the community, it stays in the community. Yeah. As soon as you move cash away from town A to town B, town A is going to suffer. Yeah. That's just a fact of life. And the high street is under more pressure than it ever has been before. So here we are as a retailer, right at the front end, the sharp end of all these changes that are happening in the banking infrastructure. We're delighted to see government support. Financial Services Markets Bill makes such a strong commitment to access to cash. We think that has to be really driven home hard. And it's not just about access to cash. I'm sure John and I hope you agree with this. But it's to do with the full cycle of cash. Yeah. Getting it out into individuals' hands, vulnerable or not, is one part of the picture. getting businesses to accept it, and there's plenty of evidence that something like 15% plus of small businesses, 15% of the revenue that should go into small businesses from cash has been missing because businesses are saying cards only, please. Once those businesses stop taking cash, we're moving to a de facto cashless society. So getting businesses to accept it, and then the main thing being that there's somewhere simple for those businesses and local for them to pay the cash back into the banking infrastructure. That's really where the post office comes in. So I think that cycle is vitally important.
Thank you, Martin. I'm sorry to rush you, but we do want to get some questions in with John. So David, quickly, I don't mean to censor you in any shape or form, but we do also...
They want to nail me before I leave.
Yeah,
Exactly.
essentially. I think that's fair.
I promise to leave plenty of time to questions during close here. I mean, so from my part, I agree with a lot of what John and Martin said. I guess just to pick up on the last point, if I'm being brief, I think from a small business perspective, what is really important with the changes that we've got in cash and less people using cash is just a practical question. How can I take the cash that I've got as a business and deposit it somewhere in a safe and reliable and convenient manner? And it's often a bit more of a human question than it seems. So if you have a kind of 10-mile round trip in a rural area to deposit cash, you're less likely to do it frequently. That means you're carrying more cash. That means you're more of a target for crime. There's those kind of concerns that come in, as well as just what are the card fees that I'm doing? Am I having to pay more than a large business for card fees, etc.? It is a practical human question with consequences that don't sound like they relate to access to cash and finances, like problems with crime, etc. And we see that particularly in terms of pubs and their takings, where they often get cash. Again, just to be quick, I think it is changing very fast how people pay. I think small businesses are changing with it. I think the pandemic has increased appetite to change faster with digital payments. Ultimately, businesses will be led by their customers and where their customers go and what their customers want to pay. It is likely that there will always be a floor of people that want to use cash. It is likely, or at least for the foreseeable future, and it is likely that that will be particularly the case in deprived areas and rural areas. And then I guess finally on financial inclusion and access to finance, I think banks have done quite a lot of work in making sure that their personal banking accounts work well for particular groups that are marginalised, whether it's through health conditions or whatever. And I think it is important as we look to the future that also extends into their business banking, so that we get people from all walks of life who want to start a business, that we can read across from the innovation that's been done on personal banking into business banking and make sure business banking is as inclusive as possible. And that's how we can get more people starting up businesses from every corner of the country. But I will let you question John and others.
Brilliant. So we'll crack on with questions from the audience. Whoever waves at me most enthusiastically, that's this gentleman here at the front row, and two others, because we'll pool three questions together. Very enthusiastic. Any other? Yes. Okay. 1, 2, 3, and we'll pull them together, and then you can package the answers around.
So this is for David, being in the Federation of Small Businesses. You may know about the Landesbanken and the Sparkassen, I think it's about 40% or thereabouts of German banking is generally recognised as one of the strongest features of the German economy.
Sorry, your questions for David, right?
Well, mostly, yeah, or the others can comment.
Yeah, but we really want to just focus on John. So
I've got to go in 5 minutes.
In that case,
if perhaps, sorry to interrupt.
Quick one for John. So there was a regulatory framework talked about by the government about crypto, obviously the future of money. I just wondered if you'd heard anything more about that, where that's going, and if we can see that in the near future being on the high street.
The lady in the middle?
My question relates to the competitiveness objective. Recent research has shown that economic crime costs the UK £350 billion a year. And do you think that the new objective should include the dimension to fight economic crime, including fraud?
And last gentleman over here.
When positive money started, it was focused on getting the nation's money created by public authority rather than by commercial banks. And I was wondering whether that's still an objective of positive money and whether that makes sense to reform the Minister.
Maybe I can just add to that question at the end. I guess it would be interesting to know your thoughts on a central bank digital currency as a digital version of cash. Obviously, you've done a lot of work on access to cash, which we recognise, and it would be great to have your thoughts on whether you think that this is an important way forward for the UK to agree this.
Yeah. Okay, thank you very much. So on the crypto issue, I made a speech on the 3rd of April which set out a whole set of things the government was doing. We were moving to, essentially, cryptocurrency. There's a bit about consumer protection, and that is underway with the FCA and the PSR, but there's a whole bigger piece around what legal framework, how do crypto exchanges work, how do you get the innovation that's inherent in the industry into the FCA so that it can be well regulated. All of those things will be for my successor, Andrew Griffiths, to drive forward, which I'm sure he will. I imagine he'll make a very early statement on that. Our aspiration in the UK is to become the leader in crypto in all its dimensions. But I have to say, the whole application of blockchain, DLT to financial markets is complicated. The way it will change our regulatory environment needs some really deep thinking and collaboration, and that was the spirit with which I was taking that forward, and I have no reason to believe that my successor won't do that. On the global growth and competitiveness secondary objective and its interaction with the economic crime thing, I think there's always an imperative in Parliament to put down an amendment to say you're going to do X or Y, to declare an intent. But I think we've got to go beyond declaring intents in politics and look at the mechanics of what we're trying to do and how we're trying to do it. Now, quite rightly, what happened with the sanctions of 1,200 individuals, I think 120 entities over the last 6 months, is a lot of legislative change as well. And some of the work that's going on through BEIS in terms of Companies House reform and some of the other reforms that are going to tackle some of the sources of economic crime, that legislation is ongoing. So I don't really think the Financial Services and Markets Bill will be the right place to locate that, but they do need to speak to each other. Economic crime and fraud is a changing and really challenging and intensifying problem for this country. And I will be taking a close interest in on that from the backbenches and working with some of my colleagues who've established APPGs and hopefully use some of the experience and expertise I've had in government to assist them there. On the whole matter of a central bank digital currency, I gave evidence last November to the House of Lords Select Committee, which set out the rationale for continuing to look at that. I think there's a great tendency sometimes to get into a situation where we've got to be ahead of everyone else. Well, that is generally good for the UK overall, but we shouldn't be doing things that don't make sense and have a clear business case. On wholesale central bank digital currency, a lot of that is already happening through the clearing system that exists through the bank. I don't think a retail digital currency is going to happen anytime soon. If it does, it will be in the second half of this decade, but there's a lot more thinking and work to be done, and I think the bank will be publishing Sir John Cunliffe is the really leader in thinking about this, and he will be publishing a paper, and the government will respond to that in due course.
Thank you very much. Since you've been so efficient, one last one from me. I was recently in some sort of press briefing by central bankers, and I was asking them, who is really responsible for engaging with the public regarding CBDCs? Because I think there's a lot of anxiety in the public, especially with respect to privacy. And the central bankers are sort of being very technocratic about it and saying, oh, well, it's not, we're just following innovation and it's really up to the governments to engage the public. What level of engagement do you encourage, and has there been enough of it? What's your perspective on that?
Well, when we get to a point where we've decided whether we're going to take it forward or not, then we'll obviously be in a position to determine
Don't
what
you need
sort
to
of
do it?
engagement. Well, not if we haven't decided we want to do it. I mean, it's a concept that's out there. As I say, it has a clear application and value in the wholesale sense, but I'm not sure it does in the retail sense. The UK's payment systems are much better than the US's. Lots of countries are at the stage of thinking through whether they want it and how it would apply, but we haven't made a decision of whether we're going to do it. So it seems odd to consult on something we haven't made a policy decision of whether we're going to actually do it or not. So, as I say, that'll be something the government will need to come forward with, and I imagine they'll do that in the next 6 to 12 months.
Okay, well, thank you very much, Sean.
Thank you.
And good luck with the next meeting. So we've kind of cut you off a little bit. So maybe we start. Oh,
I'm just going to take some more questions.
should we take some more questions and then do the discussion? Okay, sorry. Go for it.
Yeah, no, just to play the tape again. Yeah, Sparkhausen, Landesbank, German municipal banks. I think probably backed by the government. I'm not absolutely certain about that. So I don't think they need to be. But nevertheless, the big thing for them is that they back local business. They are local banks. They are municipal banks. They are backing the local business. And they're exactly what was said just before, which is that they are in the business of lending out local money to the locality, keeping it in the locality, the investments and etc. And it's not going out, well, it's not going abroad, and it's not even going to the big five as it does here. It's a win-win-win-win. So my question is this. Is the Federation of Small Businesses in the business of encouraging the formation of local banks to that end, and maybe others can discuss this, and do they see any downsides to following the Landesbank and Sparkhausen, the Bank of South Dakota, those sort of local banks?
So absolutely, I think in terms of Sparkhausen and the German system, there is a huge amount there that clearly works well. The only downside is how easy is it to read across from what they do in Germany to getting it looking more like that in the UK. But I think that's the challenge, is how can you get that sort of local finance, a more manufacturing centric economy than it has. But how do you get that and put that into place in the UK? I think is a really good question to ask.
You just have to start one and see it work.
Yeah. So.
Yeah, I can speak to a few of those points. Yeah, I mean, I think that the kind of disappointing thing is that there is kind of cross-party agreement, right, that the UK's banking sector is too concentrated and actually we need more diversity. And we heard John talking about the need for mutuals and his support for credit unions, and obviously the German system you mentioned does this very well with the Sparkassen, who are kind of regionally located, and then they have the big KfW, the National Investment Infrastructure Bank. And those big things are missing. So I think it's really about how do we get this to the next stage. And what I would say, obviously John disagreed with me, but I think it's gone. But I think it's important to say is if we go down the route of the international competitiveness for the UK banking sector, the regulators have been warning against this. And if we kind of have this step towards deregulation, then it kind of puts more strain on the financial stability risk, and actually it takes regulators away from the need to create an environment where we can actually have new entrants onto the market. As I mentioned, the competition amongst authorities, I think we don't have we need more competition, we need more banks basically doing different things. So that's our concern, and there is cross-party agreement for a more diverse ecosystem of banks. We need to kind of push this forward with that kind of reality of what that means in practice. And I guess just to pick up on a few other points, I think the economic crime point is really important. I think that it does have a place for discussion in the Financial Services and Markets Bill. And I think in terms of, crypto and as we heard from John, like wanting the UK to be a leader, I mean, it doesn't really have a public, I don't see any cryptocurrencies with a public purpose objective, with a kind of, with something that's socially useful.
Cryptocurrency for everything.
Well, exactly. But what does it do to help anyone apart from make them lose their life savings? So I think there is real concerns around the rhetoric and the kind of conversation without that kind of tangible, how is this going to move, how is this going to make us have a economy that is, more supportive of small and medium-sized businesses? That seems to be where there's a lot of consensus in the room today. And, just to pick up on the kind of central bank digital currencies point or digital cash point and your question, we see like the aspect of needing to make payments is critical to modern life. Like we kind of need to have access to electricity and water. We need to have access to making payments. So the idea that there isn't a use case for a public payment system with a new, I don't want to call it a CBDC anymore, we're calling it digital cash, I think is really not seeing the kind of whole of what it means to kind of live in the modern economy. And so for me, the idea that we should just have digital cash to facilitate the wholesale market, as John was talking about, is really missing like a big part of the future of finance, which isn't just saying how do we protect access to cash, that's really critical, but it's also about how do we have a payment system which is universally accessible, which puts a level playing field for small businesses, big businesses, for citizens that live in rural areas, to citizens that live in urban areas, and kind of helps us all move forward on the same page whilst protecting payment, which is really critical. Part of the reason we have such instability in our banking sector is obviously if one of the big banks becomes insolvent, they pull the payment system down, and that's a really unstable, unsound system. So by actually having a payment system that's separate, I think that there's a real opportunity.
But Fran, wouldn't you say, and this question goes to anyone else who wants to chip in, like this week has proven like, I think it's been an interesting week in markets, last week as well, obviously. But there was a resilience in the market. We are still here. Payments are working. It wasn't lots of people feared it might be 2008, and maybe touch wood. I mean, God knows what happens next week. But it does seem like the whole post-2008 regulatory environment is having an impact. So we have banking resolution now. We have all these capital buffers. Banks are unlikely to kind of collapse the payment system these days the way they were more likely to do in 2008. It's more likely they just like die a very slow death and see, that's kind of where we are. Do you think that changes the framing for your kind of opposition?
I mean, I think obviously what's just been happening is very, very different to 2008. We've had like uncertainty in the long-term government bond market, gilt market.
I was speaking also about like what's like Credit Suisse and Deutsche Bank. So they managed to kind of survive these terrible rumours last week about their demise, right?
But looking to the future, right, we want to think about what does the kind of infrastructure and ecosystem look like for a money, banking, financial system that does support the economy in terms of, as we've talked about, this kind of real levelling up agenda, small and medium-sized businesses, a green transition, and those things just aren't fit for purpose. And I do still think that, looking at the payment system as a kind of important public utility is kind of critical to us getting a more stable system. But I realise I've spoken a lot, so it'd be good to bring in others and the audience.
Yeah, we've got loads of questions here already pre-written here from the public, but I wanted to bring in a small bit. I'll come to you as well, Martin. But specifically, what is the problem facing small businesses these days? Why is the current payment infrastructure not fit? Why would you need a public good CBDC? How can it improve small business? What is?
I mean, there's a huge amount of problems facing small business money. Specifically on payment, there's a few things. There's one, there's just the level of card fees that they have to pay. Two, there is the additional expense that comes with handling less cash than previously, but still having to deposit it in the same way, and with less infrastructure than we used to have.
Oh, that's interesting. So could you expand on that? So essentially, when small businesses had to deal with more cash flow, there was an economy of scale, and whereas that's gone now. So you have to basically do the same amount of queuing to put your cash in the bank, but for less money.
There's practically exactly the same costs for handling a small amount of cash compared to a large amount of cash, and that is the penalty that comes with less use of cash, and that is especially the case if at the same time as handling a lower amount of cash with a similar level of cost, you are also having to, some businesses get to grips with the card system for the first time. Obviously seeing fees increase in lots of areas, so that extra cash, the extra costs on top of each other do add up, and there is there are learning costs as well as the kind of day-to-day transaction costs that come with it.
What percentage of small companies, and maybe you might have some idea, are still holding out with respect to digitising?
So
Are still cash-only businesses, so to speak?
I think there's very few cash-only businesses.
My grocer down my road converted. That was the last one that I saw during the pandemic.
I think certainly on some of the seaside resorts, there's plenty of kiosks saying cash-only, no cards, and I think exactly as David mentioned, the increase in card fees and the increasing dependence of businesses on cards will only lead to increased fees yet again. So there is always a balance to be drawn about carry on handling cash, recognising, as David says, that to bank smaller amounts of it still takes the same cost. That problem is about to get worse because of money laundering challenges. The FCA has written to all the banks to say, please impose some limits on how much cash you can take over the counter. Because some small businesses who generate an awful lot of cash are being caught up in the unintended consequences of trying to trap bad guys. So a well-known local butcher generating, maybe from a fleet of 6-7 shops, generating £30,000 a week, will run into the buffers of limits pretty quickly. And the only option for that customer now is to then take it to a bank. Well, go and find one. As David says, not only is the cost of handling the cash in the local community increasing, but if you then go and drive an hour return to go and bank your cash at the nearest remaining bank branch, the costs have just gone up again. So the unintended consequences of trying to restrict money laundering for all the right reasons is impacting the small business sector and its ability or inability to bank cash effectively and cheaply. So you're going to drive towards a cashless environment by accident. And still the bad guys will still launder the money they want to. They'll find other ways to do it. But you've ruined a number of small businesses along the way because they've moved off cash, they've gone to card dependency, and those fees will then go up and up and up. So you've kicked again in the high street.
Yeah, and I guess just to bring back the kind of point of the public payment system is we do have this captured market right now. Like card fees are incredibly regressive for small businesses. As I mentioned, it's literally quadruple the amount per transaction fee that it is for big businesses. So actually bringing in a kind of a public element via a central bank digital currency or digital cash can really help to disrupt this captured monopoly that we have, which is obviously has huge issues for SMEs.
As a small business myself, I currently take PayPal and I take Stripe, but I think the concern is not just, I can see what you're saying. You need this broader kind of public currency, public good currency to help sort of compete with potentially sort of private sector gouging of small businesses. But there are concerns, I think, not so much in Western Europe, that who do you trust more, the kind of private sector operators or the government? And when it comes to kind of, if it is a universal good, Frank, can we be sure that the government will maintain universality? Because that is really, recently we've seen sort of PayPal removing services willy-nilly based on, some might say, political agendas, Can we trust a government utility currency to never, unbank people on the same basis?
I mean, I think when you poll people about who they trust more, there really is still very low trust in the private sector delivering financial services right now. And obviously we do have a democracy where we vote in the government, and actually trust is the number one key aspect of whether a public payments utility works. Right? So that's why the way that we're thinking about it is that you need that operator potentially, like the post office, who already has the trust in the community. And so actually it's kind of impossible to do these, the kind of dystopian future I think you're getting at. But I mean, obviously privacy issues are absolutely critical to this conversation, and the way that this conversation has been accelerated, it might be useful to kind of think about, is it was kind of Facebook coming on the scene, right? And saying we're going to launch our own currency, and central banks getting concerned. What does that mean for future monetary stability? And so, when you look at who is the best player to kind of launch new payment systems, and I think the state has a really important role in that, and a public utility is critical. But we need to have those conversations, which is why it's slightly disappointing to hear from John that he wasn't interested in having those conversations now.
I agree.
When I think that, yes, the latter half of this decade might seem like a long way away, but actually if we don't start talking about it now, then there's a few risks from our perspective. That one, it gets captured by the private sector and doesn't really do anything for the SMEs and citizens we've been talking about today, and two, that it becomes like identity cards and the trust isn't there, so it doesn't get used, and so we do need to start talking about it today. And I think there are a lot of
Sorry, man. I think in the UK that we probably have the most moribund sector, unfortunately, in Western Europe. And I think back to the gentleman's question about Germany and Sparkassen. Germany is still a massively cash-dominated country, and yet they have more innovation towards newer ways, newer models than the UK does, despite all our drives to a digital currency and everything
But
else.
to be fair, they also have the biggest scandal in Wirecard. Okay,
Which,
my
which
team
is-
covered. So,
Yeah, I absolutely agree.
innovation can also encourage bad practice.
I agree, but what we have in the UK here, despite several years of open banking, and we've had a number of market changes post-2008 to try and either break up the dependency on the too big to fail thing, we still have a nascent fintech sector which has not made any significant inroads into mass services that actually benefit the population. So I think we've got
Is that
a
because
lively
fintech itself is maybe a sort of circular economy in its own right?
It could well be, and how do you break that? How do you break that cycle? I mean, ultimately, what we have in things like credit unions, mutuals, small organisations that could drive, as the gentleman was asking, local investment like Sparkassen in the UK. The problem for them is that they have an infrastructure challenge. They get without banging the post office drum too much. For people like credit unions, access to a national branch network is through us. So having local organisations that can produce microloans, that can generate small business investment in their own worlds, in their own local economies, is really dependent on infrastructure that they don't have. The big banks have been closing theirs. So we've just got a problem of general availability and access to financial services that are going to move us on as an economy.
So I think we'll take some questions from the audience, but before we do, I wanted to pick up on your point about locality, and maybe, David, you'll have some opinions on that too. It seems to me there's a bit of a paradox here, because by definition, the reason people want digital currency is to be able to spend it, not locally, to be able to spend it online and ship stuff in from abroad, because, that is, I would imagine, the number one sort of desire. If you can spend it locally, you can spend bearer cash face to face. So it seems like,
what about the basics of paying your rent and paying your energy bill?
Right.
You don't do that in cash.
But is that locally? That's going to sort of big corporate monolith organisations, probably in central London. Just not
the
transaction.
requirement for making payments in a digital form is widespread.
No, I appreciate it, but I think there was a sort of there was assertion that, like, if you have you want to maintain through the post office network, you get the money locally, you can spend it like when you come out of the post office, you spend it in the local newsagent, blah blah blah, that it stays local. But surely there's actually component there where if you don't have the cash to hand, you're more likely to distribute it beyond your local kind of environment.
I suppose
I
digital
don't know,
currency
I mean, I might be wrong.
a digital currency will enable local and distant transactions. So it's transitioning from one to another doesn't mean that one is better than the other or the other one fails. So there will still be physical cash. There'll be digital cash at some point, as the minister said. As we get through this next 5-6 years, there may be something that is a retail
But
ledger.
forging local credit unions to then digitise that and then allow that capital then leak beyond the locality of that credit union. That's where I feel there's maybe a conflict in that vision, isn't there? Or I might be being dumb. I'm open to that.
I don't think so at all. I think that there are plenty of ways in which we can all spend, and those who are digitally enabled can spend and buy anything from anywhere around the world. So that side of the payment infrastructure is probably fairly well catered for. I think what we're talking about here, what the premise is, how do we, let's just talk about that stuff. If we want to follow that agenda, how we want to get small communities all over the country able to have that kind of access. It's a mixture of local and remote access, which a digital currency, retail-based, as well as a central government digital currency would enable.
Any thoughts on the locality question? Keeping the money circulating on a local level?
I mean, I think part of the advantage of talking about credit unions and getting more local finance in is actually just about the investment in businesses that wouldn't otherwise be able to access it. And that tends to mean the sorts of businesses that we want people to be starting up in more deprived communities, getting finance that they wouldn't otherwise be able to get were that local infrastructure not in place. So I think it's more a question of how do you have local institutions that are responsive and interested in investing in places that haven't had as much investment as they probably should have done in the last however many years. And I mean, I think it's entirely right to talk about it as a utility, but it does interact with the other utilities. So, like you mentioned seaside towns. Part of the reason seaside towns are quite cash dominated is because they have terrible broadband and mobile internet connections, and you still see that. So it is part of a wider puzzle. If you can get people in seaside communities connected to the internet, they're much more likely to be able to take private keys here. And it's a slightly it's a wider piece than simply payment. It's about how can we make sure that somebody starting a business in, say, a private seaside town has the same opportunities to access finance and take payment as somebody that's starting a business in central London.
Should we take some questions? One from the audience, and then we'll take some from my prepared ones. Anyone enthusiastic? Back in. Sorry, we already had you.
My question about the future of finance is really about, it's great about evolution of crypto and things like that. So I run a small business with 10 retail stores. We've got customers that still feel comfortable using ATMs, let alone contactless technology, things like that. Going forward, future finance about inclusion, or probably more importantly, exclusion. When PIN machines go down, when you have a power cut in some of our more rural areas, it's great having these sort of things. What is the backup? What is the go-to when some of those things either aren't or won't work? People won't move across to those. There's still going to be a large chunk of society forward that will need.
It is a really important question, because I personally experienced that a few months ago when we were at a restaurant and the payment thing went down and we had to pay in cash, but we didn't have the cash because nobody carries cash. So we had to do good old-fashioned IOU, and we came back and we paid them later. But I don't know how many people came back. So how do you hedge for that as a small business?
I mean, I think the question is exactly right. I think that's why cash is so important, because it is the ultimate backup, if not the first option for lots of people. And unless you have that in place, you are vulnerable to situations like that. Restaurant, I have no idea how many people came back, and maybe will not be everyone. And there are people who are very clear that they do not want to do anything but use cash, and businesses are keen to cater for that element of their customer base. And it's not just somebody loses their card and they need to pay, they tend to go to cash and that sort of thing. It's not just people that are permanently wanting to use cash. For most people, there will be a situation in which cash is the best option for them, and if they're not able to access the cash, then that's going to be a problem, and it's going to be a problem for people that you're running a business.
I've got a very brief anecdote about exactly that situation. 2 years ago, maybe a little bit more, a small part of the Visa network, Visa authorization network, went down overnight. We saw, we shipped out about an extra 100 million overnight to ATMs and post offices because the panic that went around about, oh my goodness, Visa's gone down, we can't take payments, was huge. And I was talking to a publican the next day and said that went down at about 7 o'clock. He had to, having sort of collected all his payments, then gone online to verify them all. None of them worked. So he then had to go around his pub and ask everybody who'd had 3 pints of cider, 2 wines, 1 Prosecco, you owe me 22 quid, can you go and get it, and so on. He said he was damn glad that it went down then, because if it had gone down at 10 o'clock at night, when everybody left to go and get the cash, none of them would have come back. But every single one came back to pay their debts in cash. So, you've got a sort of trust and a reliability, and it's possibly a very British thing that we all dutifully went out, got the cash, paid the IOU, and we did the right thing.
We queue for a long time as well.
But you can't rely on that, obviously. If the system goes down, you need the backup, and the backup is quite clear. Physical cash, currently, no pun intended, but if the future is a digital currency, and you've got the privacy, maybe not the anonymity, for security reasons, but you've got the privacy of knowing I've got 50 units that equals £50, and I owe you 20 of them. I can give you those 20 in a digital currency instantly, without recourse to a third party, without recourse to an online system somewhere. I can just hand you 20 of my digital currency credits, and that's equivalent to cash. And I think that's the benefit, that when we can run a system like that isn't dependent on a third party, doesn't have fees associated with it, it's a one-for-one transaction, pound to digital currency, then we've got somewhere.
You're talking about in-person transactions, so I would just go here for 20.
Yeah, exactly so.
I've actually got a card which supposedly does this, in that it's an offline central bank digital currency, where you without any intermediaries you can make peer-to-peer transactions. So I think often in a debate about central bank digital currency, people get confused between like account-based central bank digital currencies, which could be abused by governments, but also tokenized forms or bearer instrument forms. So I think, if we're worried about privacy, we can replicate cash and the key benefits of it in terms of not gathering personal data. And this is the kind of thing I'd be interested in seeing.
Is this not why we need to have public discussions at this point, Frank? Like before we have the Tories or Labour telling us what flavour of future we are facing? Isn't that exactly the message that we should? Because I think the public isn't broadly aware of this. And
we are trying to facilitate those conversations with the Bank of England, with the Treasury, with other departments. This could have real benefits for departments like DWP in terms of getting benefits to people, increasing them in times of need like we have right now. And obviously part of the kind of issue with financial services conversations, they're not that inclusive, right? So positive money, part of our role is to kind of play that role on behalf of civil society that want to see a fairer, more equitable system in the future. And I think, one thing I didn't pick up on with John, but we think is kind of critical, is also the regulators having an objective for financial inclusion. People might be surprised, but the FCA, there isn't any objective for regulators to be holding the financial sector to account on financial inclusion. And that's an issue because it tends to be, in terms of the gentleman's question, like it can be an afterthought, right? So as we had a few years ago, when David Cameron, that seems a long time ago, was Prime Minister, he was kind of keen to just say out of a kind of global competitive angle, we should be the first cashless nation without any thought of what that would mean for the people we've been talking about today. And so, yeah, the real risk, just as financial inclusion can be an afterthought when it comes to financial regulation, is that when we talk about digital cash, we're not really talking about the best user case in terms of individuals. And as we've heard, like a token-based system could really offer a lot of a lot of the solutions that we're kind of searching for in between this conversation today. And obviously we do need to have those conversations right now, not in 5 years' time when the technology is further down the line and the design process is underway.
So, Bob, do you have a question?
So, yeah, just quickly, because I just feel that the way conversation goes with sticking with the old, that's probably a question for you, Martin, with the old technology, rather than focusing on a robust and inclusive technology, we're talking about backup for something that doesn't work. I'm thinking about it, we're not talking about keeping horses just in case petrol will not get to the garage, right? But that conversation sounds to me like that.
I would agree, and I think you're exactly right. We need to have significant investment in the petrol stations, to your analogy, in this new model, because without it we won't get to proper broadband services out to the far reach. We will always have that generic weakness in there that you need to, you can't get petrol, so you're going to rely on the horse, and we have got to address that. And I don't think that's necessarily a banking infrastructure challenge. That's almost an IT infrastructure for the nation. Broadband, 4G plus 5G everywhere and always on. And until you've got that kind of reliability, I think you have a problem.
Sure, but that's what I'm saying. Should that energy go into that rather than looking for fixing holes?
I think there's room in our lives to do things in parallel, not series.
Sure.
I'm going to take some questions from my list. Bob from London says, it's about time we had a National Bank of Britain for all public sector finance monopolies that works for us, not the city. Councils, schools, hospitals, public sector spent billions on bank charges since the financial crash of 2008. When the banks were bailed out, we still own NatWest. Let's make it into the Bank of Britain. Very light on punctuation, sorry. Let's go with that one first, because I think it's quite like the suggestion here is like the core positive money kind of perspective, right? We want to have a national champion or some sort of governmental provider of these things and utility, no?
I mean, I guess we see the need, like how we get to a money and banking system that serves an economy that is fairer, more democratic and more sustainable isn't like a one policy that can do that. There's a number of things, and that's some of the things we've talked about today. But I think it is critical that we kind of are honest around the current conversation from this government is around kind of back to pre-2008 in terms of the competitiveness objective, which I guess is what he's getting at. Like, we've already bailed out the banks, like we've already been happy with them, so how can we move things forward? And I think there's kind of two main elements that we're interested in pushing very specifically, and one is this digital cash infrastructure that can, I think, be quite transformative of the payment system for all the reasons we've had today. And the second area is the fact that we need that diverse ecosystem of banks, as the gentleman talked about earlier, in terms of Germany does much better getting money into green technology, weathering financial downturns. The UK is currently in recession. We face quite a fragile place in terms of we are officially. I think we are officially
just escaped it.
They bank even themselves were talking about that last week, and so what can help us become less fragile, less kind of risky when it comes to financial instability is that diverse ecosystem of banks. So that's not one fix, but that's having a big infrastructure bank, that's having community banks, mutuals, potentially the post office having wider banking services than it does right now. But, I think, the panelists, we have all agreed, this is often left out of the conversation when it comes to the future of finance for the UK, when we just think of the City of London and we just think of global competitiveness, and we're not really thinking about the domestic economy. And there's a real risk, post-Brexit, onshoring of financial regulation obviously presents a big opportunity, and the real risk from our perspective is that we double down on that model, which would say hasn't worked for the majority of the parts of the UK, hasn't worked for small businesses, hasn't worked for citizens, and we are, so for society, us with Positive Money, with a lot of other organisations, are trying to raise that alarm. So I welcome Bob's question, and I think that there is a widespread agreement that we don't want to go back to where we were in 2008, but there is also a kind of a weak political will to take us forward in some of the aspects we've discussed today.
I mean, David, from a small business perspective, obviously high fees are not brilliant, but there is a risk if we move to a sort of Bank of Britain model, not necessarily saying that's what you're saying, but if we did, then there's a risk, I think this is well articulated by bankers generally, that they will disintermediate, like a big national bank risks defunding and disintermediating and outcompeting the commercial players. So then instead of having a multitude of different, poorly priced competitors, you might end up with just the one, state champion. Is that something that, to what degree would small businesses benefit in that environment? Because I know you're going to know where I'm heading here, but competition is a good thing. And if we only have one state player, that crowds everybody out. We end up in a kind of China model stroke. Not even China. China has more competition than just one player.
Yeah, competition is a good thing, and I think we need to be outcome focused. So what are the outcomes that we want? We want anybody who's got a good idea or even a pretty good idea to start a new business to be able to get finance. Anybody who's running a business to be able to expand it through finance. Anybody who is accepting payment to be able to do so in what their customers are able to pay with and want to pay with. That's the system that we need. So I think we should be driven by that's where we want to get to, and we're not there yet. And then work backwards from that and to what the system to get there looks like, rather than be driven by the answer.
Alan from Malvern wants to know how is access to cash to be protected with the demise of the high street banks if any are not comfortable with online banking and the security of software and the internet. So we've covered a bit of this already, but I think just going more on the security side of things, because not just from a fraud perspective, but from a IT meltdown, like accidental, all that sort of stuff, which maybe the post office might have some insight into?
Absolutely. I think we all ought to be aware of fraud and money laundering challenges. So the question is absolutely right about access to cash, whether we're trying to take into account all these security issues. I'd offer that there is massively, quantum times different amounts of money being defrauded electronically from nation to nation than there is through cash on the high street. However, it is still a significant problem even on the high street. So trying to take the right steps to protect access to cash for those who need it and want it, both to take it out of their bank account, but also to then trade with small businesses and to have it easily paid back in again locally. I think that cycle is really where the post office plays mostly. We want to make sure that in that cash cycle, it's all legitimate cash. And that's really why we're sort of raising the challenge around sort of banking limits, if you like, deposit limits, in trying to stop the fraud and trying to increase the security and improve the provenance of where the cash has come from and where it's going to. We're sweeping up an awful lot of small businesses in that net, and that's something that we do worry about, because the security aspects of money laundering are taking precedence over the ease and flexibility by which people who need and want to use cash can actually use it in the small business sector and community.
How do small businesses feel about effectively the authorities outsourcing the policing of all this stuff to them to some degree? Especially on the limitations on cash, like, because really it's a police issue, isn't it? And it's like with COVID, at the end of the day, small businesses ended up policing the COVID restrictions, not the police, as much as, is there an element of that here?
I mean, I think to an extent, small businesses are quite used to being asked to do things that are nothing to do with their core business.
Exactly.
And yeah, it's not just true on this, it's true on a huge amount. I think we have to be, I think it is always tempting for government to ask businesses to do things that it doesn't have capacity to do, and I think government needs to be realistic about what capacity that businesses themselves have to do it. So,
I mean, is it a burden for them to be responsible for that sort of, cash management limitation and figuring out what is
Who is
fraud,
that? The banks or
small
small businesses? I don't think small businesses have been asked to be the regulator, if you like.
But they are de facto, because they're the ones...
Well, only the point at which cash is taken over the counter.
Exactly.
Now, if you've got someone who wants to buy something with cash, that's what's going to happen. The challenge I'm talking about is more about how somebody comes in with a large sum of cash paid into a bank account. The banks are the regulated entities. They're the ones that should be and are taking it very seriously. Say, if £50,000 suddenly comes in over account into an unknown account and instantly goes out again to 50 other accounts, there should be a red light flashing somewhere. I don't think that's a small business challenge. Small business owners take the cash for the services they're providing.
No, I think that's, it's a slightly different point, but I think it's still relevant in the sense like if you're a car dealer or whatever, you are now responsible for doing KYC and AML if on certain transactions over a certain level. That is now, yes, you are. I mean, 100%, I know that for a fact. Is it not the case? If you're handling small businesses handling large transactions in cash are responsible for doing KYC and AML on their counterparts. I mean, it might be off topic, but I think it's part of the future of finance in the sense that these burdens are only going to grow on small business players, especially in a mix where you maintain cash and digital services.
I think, I just think what's important is that we're not, we are ambitious in how easy we can make these things. There's a lot of good reasons for a lot of regulation. The idea that I think what I find quite frustrating is when it becomes a question of do you regulate or do you not, rather than how well and how easy you can make things and how much you can make sure that it's in the capacity of whoever you're asking to comply. And I think the problem, certainly you don't want pubs that take payment in cash being asked to do lots of things to make clear that there's all fines for that cash. That's just what pubs do. So I just think it's about being actually quite thorough about when we do regulate, how do we make sure that it's easy and the burden is falling on the people where that's appropriate and not falling on people where it's not appropriate or meets the regulatory goal.
Yeah, maybe just building on that quickly, I guess we're going to wrap up, but something that us and others, like colleagues at the Finance Innovation Lab, talk about is the need for purpose-driven regulation. We often have regulation as a kind of reaction to something that's gone wrong, or I think post-crash it's felt very much like risk management is the kind of frame of the financial regulators, and I think what that means is you kind of leave out the need, as we've talked about, for kind of an ecosystem of banks in the UK or of finance providers requires different kinds of regulation than what we have, which kind of is designed really for the incumbents. So I think actually part of this conversation in terms of the future of finance and all the kind of areas that we've covered today requires regulators to also be slightly more purpose-driven than they are and slightly less just risk managers, which I think inevitably leads to things not really being done in the smartest way, and also having unintended consequences quite often for small businesses and others.
So, any more questions from the audience?
Okay, I think what you were saying was very interesting about what the post office is doing or hoping to do. So, in, say, a small town, say in Thirsk in North Yorkshire, if they've closed all the banks, is the post office hoping to have a sort of room or a counter where people can go on maybe different days of the week to somebody representing Lloyds Bank or NatWest or something like that? And how's that going to work? I mean, that sounds interesting for people who are scared, who don't have internet or have a phone call from somebody scaring them and wants to actually go and see a real person.
Yes.
Is that what
that is exactly what it is. It's a shared facility. So in most cases, it's going to be a third-party site. In other words, you can imagine an empty Costa or a sort of a retail unit somewhere on the high street.
Right.
The banks
with post office on the front.
Post office on the front, and it's just a post office banking facility. So it's not for parcels and letters and all the rest of it. It's just a banking hub. The banks themselves, through Link, will assess the community and say, to your point, all the banks have gone first. There is now a dearth of cash, and there are problems there. We need to establish a banking hub. Post office will deploy one.
Yeah.
In that banking hub will be, as you said, a room, whereby on a Monday it could be a Barclays rep, Tuesday Lloyds, Wednesday HSBC, and so on. And customers of those banks who have lost their face-to-face connection with the bank can now get back to what you might call relationship and high street banking. They can come in and talk to somebody, can help them through making third-party payments. They can help them
and is that only Crown post offices or sub-post?
No, it's not. It may not actually be a post office facility as you currently see it. As I say, it might be a third-party site. There will be a post office in the town. There always is. If we can make them fit into post office, that's one model. If we can't, we will open a new location in which we will build a specific bank hub with that shared user.
That sounds a jolly good service.
Thank you. I think you're right.
And that will be open to lots of different bank representatives. So,
yes.
Okay, so
All of the high street banks, and obviously you have different dominant banks in different areas. Barclays is very dominant in the southeast. That's the historical centre. Lloyds is nationwide. RBS is quite clearly more sort of Scotland. So depending on the bias, you might have a couple of days of one bank in 1 week if they're dominant in that area. Some banks may not have any customers of any real numbers in that area at all, so they may not be there. But it's going to be a mix and match for each community.
And how does that, who funds that? Like, how is that cost effective for the post office?
The banks are going to be funding the utility facility that sits in there, and all the transactions that go through the bank in terms of cash in and cash out is exactly the same things we do in any normal post office nationwide. It's a banking framework transaction.
So it's basically a pooling of resources between the banks to service hard-to-reach areas that are not economic to manage direct branches in.
Through their own branch anymore, exactly. So you might have
So
seven banks represented where they've all closed their branches, so 7 branches squashed out to one.
So it's kind of like an oligopolistic solution problem, where they club together under the auspices of a kind of government mandated.
You'll have to spell that for me, but I'm sure you're right.
Yeah. Okay. No, it's really interesting. Fascinating.
Who owns the post office now? Do we?
Yeah, exactly.
Yes.
Yes. So we own
the
it.
state.
We all own. Yeah.
It's the first
Not
pathway
the
to
Dutch post office or something like that.
No, it's all the UK post office. It's our own treasure and our own jewel.
Yeah.
Okay.
I think that we're at 20 past. I think we can finish it early. Maybe people who are here in person can then talk to the panelists directly over some coffees that are teas and coffees, which are available outside as well for free, funded by unknown sources, but probably very nice. So I urge you all to go and do that. So thank you very much, and thank you for joining me. Thank you, Fran, for having me.